The EURUSD is dropping right now, down with almost 0.5%. This follows the latest trade deal between the EU and the US. It's quite straightforward. There's now a baseline tariff, in other words, an import tax of 15%. So if you're an American and you want to buy things from the EU, in general, you just need to add 15% on top and you'll get the final price. Now, why is the euro down then? Because normally, when you have this kind of situation, in this case, the EU has been impacted, the currency of that country or the bloc here, the EU, would go down by the same amount. So, if that would play out 100% here, then we would see this trade lower with about 15%. That would take us from the current level almost down to parity once more. That would take us down, actually, down to parity to be exact. So that will be a 15% slide. Now, if Euro USD drops to this level, the benefit from the American consumer would be that they can buy whatever they were buying before at the same amounts because their currency is stronger. And at the same time, in the EU, they don't have to make any changes to their capacity because they're selling the same amount of cars. Now, if the exchange rates remain at these levels, realistically, what will happen is that Americans will consume less and the Europeans would need to fire people because maybe they have overcapacity. So, they have too many people and they're not all working because they're not selling as many, say, cars as before. So that is what's happening now. And this is what usually happens. But the tricky bit here is that the technicals are not agreeing with this yet. Now, if you're really bearish, yeah, you can just short here and maybe be stop loss above here. But if you're a bit more pragmatic, then you're looking at this uptrend. And what we're looking at here is a break to at least 115. Break here. And yeah, we're probably going down to 112, maybe 110. But until we break this, the trend remains bullish. And why could it still remain bullish? Because the the process of introducing these tariffs will hurt the US consumer and it will also hurt the European producer. So it's going to hurt on both sides. Economists think that GDP growth will be lower in the EU by 15 to 20 basis points. So, for example, if the growth rate was at an annual rate of 1.5%, which it was, then that will be 1.35 going forward. And economists say that the same thing is going to happen in the US. Now, moreover, the Americans now have a 15% trade deal with the Japan and also 15% trade deal with the EU, and probably going to have maybe 20% or so at least with China. And what's interesting here is that there was a report published over the weekend as well that showed that the exporter, so the producers like the EU, take a bit of the pain, but that was just about a tenth of the price increase. And then you will have the US consumers grabbing half of the pain, and then the rest would be the US firm. And what's happening here is that realistically we'll have more inflation. And this is the tricky bit because Trump is really forcing the Fed to cut rates. Now, if we have lower economic growth, and Trump is going to use this as an opportunity to say, oh, look, you got it wrong. But if we have lower economic growth and then you have higher inflation, there is a risk that we can end up in what we call stagflation. And we have seen this in countries like Turkey, for example, where the president has very strong control over the central bank, and we have very high inflation. And because the inflation is stating, it impacts how people do business. And that at the end is causing the economy of Turkey to not be as strong as it could be because they don't have inflation in control. And that could be one reason why EURUSD could be at 120 or higher if that were to happen. How do we know then from a trading perspective what's going to dominate? That is where we have the charts. So I like to wait for the price to agree with the chart. That way I know which side of the argument is winning. Because at the end of the day, the market is made up of so many different people, myself, you that is watching, and everybody else. And we don't know which side is winning until we see it in the charts. Unless, of course, you have very strong opinions and just feel that, oh, this is too high and this is bad, let's just short. But then again, it's all about the risk reward ratio. If you're right, we go down to 110, 108, and you make a good amount of money versus a risk here that you're being stopped at. What's your take on the Euro USD? Is this going to go down? Is this the peak? Or is this just a little blip before we head higher?